Welcome to my channel and this week review of stock markets and stocks in my portfolio. TSX was up 0.7% on the week, as commodity markets continued showing strength, including precious metals markets. Last week I mentioned that TSX may continue the upward momentum for a little longer, before turning into correction, particularly with tailwinds from commodity markets fueled in part by geopolitical tensions. It is likely that next week we may see the same momentum. Last week I mentioned technology stocks in my portfolio, and why I am not very optimistic about their upside momentum in the short run. Today, I wanted to talk about my holdings that I do expect to perform relatively well over the next months. They're from different industries but in the same category of high dividend-paying companies. I think there are still some good bargains in this category, as investors were bidding up technology stocks over the last year or so. More and more of them will want to rebalance their portfolios from overpriced categories into something like undervalued high dividend-paying stocks. Recently, I grew to appreciate dividend-paying stocks, and gradually increased their share in my portfolio. The value of dividends is that they can noticeably smooth dips in your portfolio during market corrections, and help achieve your target portfolio returns. I am considering focusing entirely on dividend-paying stocks going forward. My highest-paying dividend stock is Brookfield Global Infrastructure Income Fund. Its current dividend yield is an impressive 16%. I bought it in February, when the chart started to look bullish. And so far, the chart shows my favorite pattern, bouncing above the red line, or 120 SMA. The max chart also shows my favorite pattern, just coming out from all-time lows. So there is a good chance that the bullish trend will continue. My only concern is that I don't have much experience with investing in income funds, and don't know any specific risks I should be worried about. I will address this in later episodes, as I gain more experience. Transcontinental is my next dividend stock, which I am quite bullish about. I am expecting the price to bounce upward from the 120 SMA and continue positive momentum. Similar to the Brookfield Income Fund, the max chart is currently in my favorite territory of just exiting the period of a prolonged decline, forming what might be the first bull flag in the long-term upward momentum. The company produces flexible packaging for a huge selection of products and markets. It is also in printing and marketing business, which makes it a very sustainable business model. I like having a company like this in my portfolio. The company pays nice dividend of 6.5%, has low PE, and low market cap relative to the $2.5 billion earnings. Analysts' target price also supports my assumption that the current stock price is a bargain. It will be interesting to see how the price momentum for this company unfolds over the next few weeks. Last week I talked about Cardinal Energy, which pays 10% dividend on the current share price. I still remain cautiously optimistic about its price momentum. You can watch previous episode from last week to hear my thoughts on this company. And that's the end of this episode. Thank you for watching.